CoinAgenda tradition of usually having the last day start a little late if the party lasts late, and it did. So everyone enjoy last night at the Legendary? Great. So today we're going to start with my friend Gil Penchina, who I guess we've known each other for almost 20 years. Yeah. So Gil, if you're not intimately aware, is a legend in the industry. Started out on the founding team at eBay, then went on to spin Wikia off from Wikipedia and run that. And really is probably the biggest thought leader in the industry about what it means to be an angel and responsibility of companies to angels and vice versa. And we're in a real shifting landscape right now. Gil also, a couple of years ago, decided to start, so originally it was called Flight. Well, we'll get into this. So, ladies and gentlemen, Gil Penchina. Have a seat, and we got our mics here.
Mics? All right.
We do.
Mics would be good.
Okay. So, obviously, you had a great career before you decided to get into angel investing. A lot of times people say, okay, I'm like, made a lot of money, have a network, and I'll play golf and occasionally invest in a deal. You took a different approach. I mean, with the original Flight, I remember we were sitting at a conference and you said, there's like 20 areas I want to go after, and I want to partner with like the best people in the space. And you then said, let's do a Bitcoin angel group together. It was you, me, and Nick. I still have my reference from him on AngelList, the god of Bitcoin, from a few years ago. And it was early stage Bitcoin before all these ICOs happened. And we still have a couple of active things in that, but not any new investments in the seed stage. You then went on to do a little bit of a later stage on the venture side, and you've also done ICOs, particularly last year when tokens were kind of crazy, and also just had good returns for whether they had sound business models or not. And now they have bad returns even if they have great business models. So take us through the journey a little bit, what your thought process was at Flight, and then going later stage, going ICOs, and now what you're doing at Ridge.
So when Michael and I were first doing this, we were working through AngelList, and as he pointed out, you would actually buy equity in startups that did crypto stuff, which seems so like 1970s now. And that was only like 5 years ago, 4 years ago. Software, yeah. And so we would use AngelList basically to go and collect money from upwards of several hundreds to a few thousand angels to invest in an individual startup. And the idea, much like ICOs, was the more supporters you have for your project, the more likely it is that someone will be able to help and add value and find ways to sort of help you break through the crowd. And if you look at the startup landscape, I was joking with a friend recently that, he was saying that crypto hedge funds are down 70%, and isn't it tragic? And what's wrong with everyone?
But some of them were up 2,100% last year.
Yeah.
Average it out, it's still 5.
So I reminded him that Hummer Winblad had a fund that invested in 99 and 2000 in regular startups, and for every dollar you put in, you got back 0.6 cents. It was down. It was the record worst venture fund of all time, 99.4% loss.
I think we were the 0.4% gain because MarketWire was in that fund.
Oh God!
And we exited, and they made good money on that.
That might have been the only one. They had that was the fund that had things like Napster and SwapRat, Pets.com. It was epic how many bad deals they could get into. So for those of us who've sort of been through the 2000 bust and then the 2008 bust, looking at a token that's down 95%, I go, Jesus, it's worth 5%. That's so much more than most of the startups I invested in. So I'm an investor in, last count, about 300 traditional startups as an angel. And I would always tell people like 60, 70% of them are actually a zero, like 0, 0, 0. Like I don't even get the money back for the postage, for the check I mailed them. So, from that standpoint, the crypto washout, to me is a relatively benign one where I can still trade out of one of these tokens and, get $50.
Or you can hold and hope that the ones you really believe in can come back, or you can, I think there's going to be a wave of interesting M&A plays potentially. I mean, there's only been a handful of them, but, Stellar went and bought Chain, right? Which you would have thought it was going to be the other way around, but they had a big market cap from their tokens. And then, I think one of the first M&A deals was a company that we worked with a few years ago, Game Credits. So Game Credits basically had just been a mine token. They had a lot of tokens out there. They kind of were flailing. The original tech team kind of like was, kind of abandoned the project, was down to tenths of a cent. And a new team came in and said, hey, why don't we just go and buy the tokens from the big guys, buy some more off the open market, and then just talk to the devs about changing the model. And, it's kind of a weird type of, because we're used to an environment of like a board and board rights. And, now there's all the models where there isn't a for-profit, when it's a foundation or whether it's a quasi-foundation or an illegally constructed foundation. Still you end up having, these don't go to zero because at the end of the .com crash, board members said, get this embarrassing thing off my balance sheet. You don't have a board and you've got money in the bank that you raised. It's been tending to just become a lifestyle business, but somebody responsible might come in and say, hey, you already got your Lambo. Let me go and like buy your coins out. And because I remember in the .com era when everybody had complete capitulation, there was an article in Barron's, you may remember this one, it was called They Could Go All the Way to Zero. And it had a list of like, I think 50 or 60 publicly listed .coms that were trading at considerably less than cash in the bank.
Yep.
I remember trying to buy one, and Hummer Winblad and Sequoia said, that's just not how we do it in Silicon Valley. But literally, I was friends with a guy who was a complementary business model. They had $20 million in the bank. No debt that I could tell other than like real estate that we could negotiate out of. We could have got them for like $7 million. And I think you're going to see some of those things.
Well, I mean, you definitely have tokens trading at less than the value of the ICO they raise, so it is happening. And then, of course, there's the usual cry of like, we were talking earlier over coffee about, you need regulators, and the SEC is going to come in and fix all of this. And I often remind people that I read the Peter Lynch book on, invest in products you like. So if like you like Starbucks, buy Starbucks stock. And, again, back in the 90s, my wife was using Webvan all the time. So I bought $25,000 of Webvan on E-Trade under, proper SEC regulation. And it went down a lot. And when I went to sell it, I kept getting an error message on E-Trade. And it like wouldn't let me sell it. So I finally called them and I'm like, hey, why the fuck can't I sell my Webvan? I'm trying to get my tax loss. And the guy says, well, when the cost of our trade exceeds the value you're going to receive, because your stock is, your 25 grand is now worth less than the 1995 we charge to do a trade. The system doesn't know what to do with charging you more than the value you're receiving. So he had to manually process my trade. So I mean, it did go to zero, right? And so regulation doesn't necessarily help. I think acquisitions may happen. I think it's more. What's more interesting to me is like, if someone thinks the code is useful and the team is gone, why bother with buying it out from token holders? Just fork it. Like take the code and go off on your own direction and not have all the baggage of whatever.
That's true, although in some cases there's a community, or you could also have, I mean, one interesting model, a company that we launched a couple of years ago, Lisk. What happened there was Max Kordak, brilliant young entrepreneur. When he was 19, he was the head of Next. And Next has had an interesting up and down. I mean, they were a top 20 token for a while, and then they kind of crashed, and they still have an interesting active community. But he and Oliver, his co-founder, decided to start this other token called Crypti. And Crypti ended up just having way too many, this happens sometimes in kind of these open source projects. It was just, 80 voices arguing with each other, right? And they just finally said, we need to do something where we have a little bit more control over this. And so they came up with the idea for Lisk. And they said, we don't want to abandon the crypto community though, so what we're going to do is we're going to go and raise, I think it was like $7.5 million, $8 million. And they said, it'll go 85% of the tokens out for that. We'll keep like 4% a piece and have some stuff for advisors, which they had, Charles Hoskinson was an advisor, brought me in. It was like, it was a pretty good team. And they said, if you're a crypto holder, we will go and convert your crypto into here, or you can pay Bitcoin or Bitcoin or Ethereum. 85% of the people who were crypto holders converted and did well because it went out at 7 cents and it went up at its peak, I think, to $40, and it's still $3.
Well, so I mean, I guess the question you're asking is, should there be more of this consensus-style voting? Like Dispatch Labs is trying to do a voting-based system so that the holders could actually outvote management, I guess, right? I mean, so that's certainly one approach that some have tried, notably Tezos and others. I'm not sure it's a good one because I'm not sure the community always has the best answer to everything. But what is governance if not through voting? How do you govern these things?
Yeah, and I mean, I mentioned yesterday in one of the fireside chats that there's a fine line between consensus and mob rule. I mean, in the early days of Dash, and we worked with them there, you literally had to have. I mean, when I was doing PR for them, the contract had to be revoted by the master node holders every month. And if they had a pet project they liked better that was involving one of them, all of a sudden that went up, right? That went on. Now they're able to sign longer term contracts, but they had to rewrite the code for that. So the code is law is a little bit more complicated than it sounds, and not always in the best interest. Although Dash, to their credit, I think did a phenomenal thing by basically saying you can have the same kind of economics on mining if you give out 70% of the coins instead of 100% of the coins. It's still going to have the same kind of algorithmic approach, and then have the master node holders basically stake to get eventually interest, and then 10% for the foundation. And I think that's one that's been widely copied, and I think it's actually, if it was back in the days of Bitcoin, you would have never had any issues of like, how do we fund the Bitcoin Foundation? It would probably be like the size of the Rockefeller Foundation by now.
Well, that's interesting. We're like, again, sort of participatory democracy. If you could elect the board members through the token, but then the board members actually get better educated and make better decisions.
So I'm going to talk about this a little bit on the compliance governance panel that we have later, but I've proposed, just kind of floating this idea out there, I think the new model that you're seeing, so there's, and Bruce and a few other people talk about that, there's currency, right? There's things that are competing against Bitcoin and their infrastructure tokens, and those, if they're completely decentralized, they should be foundations, they should be owned by no one.
Yep.
And then you can have, your for-profit is like make a consensus, and you and everybody else can still build things on them. But there's no funds that go from here to here. Sometimes you have things where the foundation will go and get a venture arm like EOS and Quantum, et cetera. But you have to really show, to keep your kind of nonprofit status, that you're not just funneling money back to the people who founded that. Yep. That's always a moral hazard. But I think that the one that's kind of in the dApps community, which I'd say is probably the majority of ICOs last year, it'll continue to be the majority of just like, hey, let's do a new medical this or that. Let's do a new automotive this or that. I mean, every industry is going to have disruption for the blockchain. It won't matter whether it's private or public, and I'm of the opinion it'll probably be public with stacks on it, like the internet beat the intranet, right?
Yep.
And but I think that if you have a for-profit that maybe owns the IP and then goes offshore until they get the SEC. Now, when that's done, then maybe everything just stays here and it gets simpler. But if you have the tokens controlled by a different group, and there's token holders and there's shareholders, I think that there should be a independent representative on the board of the for-profit from the tokens, and vice versa.
Yeah, that makes sense. I mean, it's nice to have some commercial thought process in your nonprofit.
Yeah. Or an observer, just because, unfortunately, there's two possible things that can, mess with the returns of angels and investors and token buyers, is if A, on the one hand, the token buyers are just doing it to fund the for-profit, and there's no token economics. They just, we'll take dollars, we'll take anything. Tokens just kind of there to fund us. That's a dead model, right? Yep. That's a fraud almost. Similarly, if you're investing in the for-profit, and all the decisions are basically just made to raise the token price, and there's no revenue that ever comes in, what was the purpose of the for-profit, other than maybe to own some tokens? So you've invested in both. What are your thoughts today about what your investment thesis is in a October of 2018.
I mean, I worry about serving two masters, right? So if you have a nonprofit and a for-profit, sort of the Tezos sort of style model, it is really hard to align both of those. And if you go back and look at where it's worked, it's been incredibly rare. Things like Wikipedia managed to be a nonprofit and still develop interesting projects. So I'm not a fan of the nonprofit in a DApp, certainly. In more of an infrastructure project, I could see how you could get there eventually, in the same way that, like, you know, MySQL or Linux or others as open source projects are in theory nonprofit-y. But even there, I mean, the best projects tend to have a dictator who sort of is in charge. So
Metallic, for example.
yeah, no, I actually I
dictator,
prefer
so,
that honestly, because they can move faster. And you know, there was an old joke that the only animal with many stomachs and no brain is a committee. Like, committees don't make good decisions, and participatory voting often makes worse decisions. I mean, I live in San Francisco, and the California ballot initiative is completely democratic and completely insane. Like, nothing on there should be voted on. It's all ridiculous, and nobody who votes has ever read any of the shit anyway. So, you know, I'm not a fan of total participatory. I'm not a fan of nonprofits. I think nonprofits serve a great purpose, which is to take money and use it for charitable purposes. They're not as good at making money,
business
right?
purposes like the Linux
Yeah.
Foundation.
Yeah, exactly.
Yeah. And I proposed in a few instances that if you're, you know, looking to do something in the United States, you don't want to go offshore, and you have something that's truly building a new infrastructure, that doing a 506, let's see,
Not the 501c3.
no, 501c6. That's what the business leagues, that's what the Santa Monica Chamber of Commerce and the Linux Foundation are. And it's a membership group where you're trying to spread the new technology.
Right.
And that is a nonprofit, so you could put it in Wyoming and be a nonprofit and have all your money transmission rules go on. And I've proposed this, no one's done it yet, but I think it's an interesting model.
I have not spent much time looking at that.
Yeah.
I've seen a few B Corps, which are cute, but don't really accomplish anything.
So yeah, I mean, as somebody who has you know, invested in a lot of tokens, advised a lot of tokens, and my incubator, B-Commerce, I mean, we had one kind of you know, traditional. Our first thing out was sort of a eBay using crypto. This was like 2015. Built a good platform, but it was probably a little bit too early and needed like many more. In fact, I had people wanted to find the next round, and I said, I think you should wait. I wouldn't think we're ready yet, you know. I didn't want to take the investor money until I thought there was a real team behind it.
Yep.
Because Jim was really the tech guy who was really more passionate about building technology. And with Aspire, which is the one we're doing right now, I mean, he's got people wanting to buy the tokens, and I'm like, I gotta get the right model. And then all of a sudden I got it, and then I talked to someone on the accounting side. I go, oh, we got changed. And I talked to someone on the legal side. And it's just like, you know, I'd rather, you know, no wine before it's time, right? And I'm still kind of, you know, looking at the Wyoming nonprofit model, looking at like the Panama nonprofit model. I mean, I'm looking at, you know, I've seen people do Panama nonprofits through a Cayman Star Trust, and it's just like, it's so crazy just because the SEC doesn't want to make up their mind and say, these are the rules. Do this, it's bad. Do that, it's good. And you'd think the Howey test would be it, but I don't want to talk legal because we've been doing it the whole show. Where do you see this going in terms of just the growth of the industry, the quality of entrepreneurs who's getting into the industry, the opportunity? Are we going to have sort of a dead period for a while and then a boom? Is it going to be just sort of kind of like building things in like 1986 or in like 2003, or, you know, all the kind of like fallow periods where people just get to work and they don't raise money, and then all of a sudden when money's available, they're already there with a good product?
Well, I wish I knew the actual answer of what the future holds. But, I mean, I think the DApps sort of explosion sort of happened.
Yep.
And you know, Bezos had a great quote in the mid-'90s where he said it's like a Precambrian evolution. There'll just be a lot of new organisms, and a few of them will win. So I think you'll see, you know, 1, 2, 5, 10 companies out of that survive and do very well, and the rest are all going to be web vans.
And Naval head of AngelList, Ramakant, said in a panel that I was at in 2015 in London. They said, how many of these apps can there possibly be? And there was probably about 10 at the time. And he said, as many apps as in the App Store.
Yeah,
they won't all be Angry Birds.
Yeah, yeah.
And how many websites can there be?
Yeah, I mean, I met a guy whose entire app was downloading all of Wikipedia onto your iPad, just so you could have it offline.
Oh, quick
And that's an app.
quick aside, what do you think of Everpedia?
I thought it was a cute idea, but I was not a supporter at the end, largely because of the psychologist's notion of intrinsic and extrinsic motivation. People on Wikipedia do it for passion. People on Everpedia do it for money. The passionate people tend to win when the amount of money is fairly small. So, like, I can't make a living.
I will say one thing, though, and I'm not an investor in Everpedia. They presented once at CoinAgenda. I looked up one day because, like, you know, my Wikipedia presence is fairly small. I haven't, like, tried to work it, you know, but I've got a few people who put things up. But I looked under me in Everpedia. Oh my God, it's like every video I've ever done. It's like pages and pages and pages long. So I have no idea who wanted to get tokens to do that because I didn't put it in.
Yeah, so somebody made a couple of bucks doing that.
Yeah.
That's great.
So it's interesting. So it's you know, I mean, again, it's sort of like altruism versus capitalism, and
Yep.
you know, I mean, I think capitalism typically, if it's not corrupt, is still something that moves faster.
Is.
I mean, you're obviously a capitalist.
I might be biased. I mean, so I was talking to Miko earlier about sort of where is it going, and the one thing I keep waiting for is real security tokens, and by that I mean asset-backed tokens, which we've been talking about for a while. This is not new. But if you look at what infrastructure has been built out today, it's a lot of people have wallets, and there are a lot of exchanges. So where is the trading of the things that have value?
Yeah, so I mean, most of yesterday was about this. We had a very good, it's online if you want to look at the videos. Bruce Fenton did a big, long, you know, thing on security tokens because, you know, obviously, you know, executive director of the Bitcoin Foundation, had the Satoshi Roundtable, yet comes from a stock brokerage and wealth management background. And, you know, I think right now what's happening, and seems to be the general consensus of the show, is that security tokens are going to be like 10 times the size of the market of utility tokens or more, you know, and probably even larger than the entire market cap of Bitcoin, when they go and actually solve problems like getting rid of ADRs, getting rid of pipes, getting rid of the penny stock market. And eventually it'll be like surrounding and like, why do we don't have people, you know, manually trading things on the floor of the New York Stock Exchange. Because better technology, it'll eventually take over the old technologies of NASDAQ, the bourse, et cetera. Could be 10 years. Right now the problem is that the only security tokens that make any sense to buy are the ones that are actually funds that are paying dividends, because you don't care about liquidity. If I'm getting 20% a year, I'm not in a hurry to sell this thing, right? But right now you have to go and do these crazy things like, you know, either do a Reg A plus, none of which have been approved in this space, and you can sell to anybody. Or you have to go and just do an exemption on a Reg D and a Reg S like Brock did for a partnership position in BCAP, in blockchain capital, and no exchange will list it because they don't have them yet, but they're coming.
Which is really the regulated exchange, right? That's going to be the thing that...
Well, the regulated equity exchange.
Yes.
Yeah. I think technically you could say that the unregulated exchanges are still at least semi-regulated by the CTSC. They can go and say, hey, you're manipulating markets. They've been light on saying this, but you know, silver is not regulated, but if you're the Hunt brothers and you're trying to crash the market, you're going to...
Then it is.
Yeah, then it is, exactly.
Yeah, very true. So that's what I'm looking for. I'm looking for the first regulated exchange. I think that's going to be a big catalyst for another wave of, you know, crazy growth.
To invest in the picks and shovels, the exchanges. What do you see as sort of the first... because again, people are saying, oh, well, equity is going to be based on equity, and you're not going to have these 10Xs and things like that. Bullshit. eBay, Amazon, those were way more than 10Xs. So do you think that the first 10X, 100X unicorn that comes as a token natively is going to be something that is, you know, kind of meta, where it is a token company that then is a security, or is it something like a restaurant chain or a fashion chain or a big brand, an entertainment company?
You know, I go back to, we just need a lot of them, and then the good ones pop up and you don't always know what it's going to be. Like I found out recently that there's an online retailer in San Francisco called Revolve that's now $1 billion company selling women's clothing online. Like who knew? So you can't predict these things. To me, the securities, the SEC sort of compliant brokerage would be a way to enable all the next wave of stuff. And the reason I like picks and shovels businesses is I don't think I'm actually good at picking who the lucky winner is.
Yeah, you've only had $60 billion worth of exits.
Well, you know, you do a couple hundred deals and some of them work. But I went back and looked at some of the early ones, and like I was an angel in LinkedIn, and I remember I went back and looked at the notes I read when I invested in Reid Hoffman, and I literally said, Reid is a really smart guy, this idea sounds really bad, and he'll pivot to something better. And he didn't. So clearly I was bad at picking the ideas, and better maybe at picking the people, but and that still matters here, right? I mean, the people in crypto matters more than anything, right?
Although in crypto, sometimes, I mean, you can back good people and just the market just completely, but that's not anything when the market is
Yeah, you
so important.
can't stop that.
Yeah.
This is great.
So some questions, one or two quick questions before we get on to our presentations for Gil. Okay, straight ahead. Warren, you want to grab this?
Hi, I'm Coco Vinny. I agree with you. I'm seeing a lot of air and a lot of different things there, and I feel that the base has to be on a real commodity, a real baseline like agriculture or something that's very, very solid and predictable and long term for it to really show the value and get that traction. That's kind of what I feel the same. What are you looking at right now?
Yeah, I mean, I think Michael actually may have nailed it, which is it won't be trading Cisco or Dell or Amazon stock. It's going to be these fringe, whether it's pink sheets or individual homes, right? Like there are a bunch of people who are like, oh, the recession's coming. I would love to short Florida real estate. I don't know how to short Florida real estate. There's no way to do that, but there's probably a token that has some homes in Florida that, that you could then borrow on Bitfinex and short, right? So it's going to be finding things you can't do easily today that, those things will get asset backed because no one else will take them, either because they're too small, they're too weird, right? And so it'll be these niche little markets where it starts, most likely. Whether that's, so I don't think it's going to be like commodity futures because those are actually relatively efficient. I think it's going to be really strange shit, more like CryptoKitties that is where it starts.
So what do you think the role of like a lead angel and an angel list and sort of Ridge and is going to be in this environment when you're going to effectively be going public as an angel company? I know I've heard a couple people during this show say do a Reg D, Reg S while you're still young and then pivot it to a Reg A and then just grow from there. I think there's going to be some restaurant chains that just basically in the future are a hot restaurant chain of like, two stores, and they want to go to 10, and they just go Reg A plus to start, and they have a hybrid where they can also give a discount to their clients, and then all of a sudden the angels are less relevant, the VCs are completely irrelevant, and the private equity guys are, unless they fail, are out of the picture. Thoughts?
Wouldn't it be great if your customers could win when you become successful? Like how many Uber drivers would have bought $50 worth of Uber stock early on because they got it before anyone else did? Like, I think it's great, and Reg A Plus is certainly one way to do that. ICOs effectively showed how many people wanted to participate in a project if they were allowed to. Now, the government's view, which is not entirely wrong, is we don't want Joe the plumber, bankrupting himself by putting all his money in one crazy, risky idea.
But they do let Joe the plumber buy penny stocks.
Yes, they do, which, again, are subject to some amount of regulation. So there'll be a balance. The SEC will eventually come out with something useful.
Go on the casino floor here and bet their entire life savings on red.
And that's okay. We got one in the back.
So you mentioned that you're trying to find some STO of actual value that people would like to trade. And just curious, over at Vault Logic, we're going to do an STO for the 33% of all the crypto sold at the first 1,000 ATMs. Create so it's a revenue share on the first 1,000 machines, on the first 33% of the first year, 25% the second year as we grow the network. Does that sound like something that is interesting to investors? It'd be easy to explain, and you can physically touch the machine and get paid out at the machine?
Yeah, I mean, it's sort of an example of what I think a regulated exchange would be able to trade, because it's not something, Goldman Sachs is going to go out and slice and dice and sell to, their LPs. So it is, to me, a good example of something that, when there's a regulated exchange, should be on it.
Do you think like T0 could be that exchange, or the Medici projects, or
I don't know. I mean, the T0 guys are doing so many different things, including they're running an accreditation website. So I think their goal is to be an enabler of those exchanges. I don't know that they actually want to run the exchange. I think they'd rather everyone, that Coinbase and Gemini and everybody use T0 to sort of facilitate a lot of their stuff. They may have to do an exchange because everyone's afraid of it, but I think the first 1, 2, 3 regulated exchanges that go through all the hoops are going to do very, very well, because there's so many people who want to put something up there, and frankly, who've been so terrified by the lawyers that they're afraid to do it any other way. And so if they could just be told, these are the things you do and you don't go to jail, everyone will flood there.
Quick question on Circle. So Circle bought Polynix, to many people's surprise, obviously a lot of Goldman Sachs backing, and then said they're going to apply to be a security token exchange, and it's already one of the leading utility tokens, exchanges. So thoughts on that?
I mean, I think they're a great contender. I mean, they've got sort of a good pedigree of people and plenty of assets, and they already have some liquidity, and but to your point, when the first securities exchange launches, it's going to look really shitty for a while, and everyone's going to laugh about how there are all these weird things nobody wants with no liquidity. Just like with AngelList, just like with Indiegogo and Kickstarter at the beginning, all these things, when they start, they just look fucking terrible. And then eventually they get less terrible, and then they look mediocre, and then everyone goes, well, shit, I could have done that 10 years later, when they're awesome, right? And it's about being there early and having sort of the persistence and grit to just hold out through all these various nuclear winters and everyone making fun of you and all the other things that happen along the way in any entrepreneurial journey. So that's probably a good way of thinking about it.
Okay. Thank you, Gil. All right. Ladies and gentlemen, Gil Penchina. Thank you.